Hi guys. Today we will analyze V.F. Corporation stock, and calculate its intrinsic value using two different valuation models. Enjoy! Hit the like button and subscribe to my channel if you want to see more videos like this. Technical analysis. The stock has been a bad performer in the overall market. Both the long and short-term trends are negative. It is better to avoid buying stocks with negative trends. Support levels are around $54 and $51. The next support level is around $48. Resistance levels are around $65 and $71. The next resistance level is around $77. In the last month the stock has been trading between $51 and $61.80 range. It is currently trading in the middle of this range. It may be a good idea to wait for a pullback before considering an entry. The stock has an average volume of 3.5 million. This is a good sign as it is always nice to have a liquid stock. The stock is currently trading in the lower part of its 52-week range, which is not a good signal. The stock has been falling since January 2021. It may drop lower before it goes up. Be careful. Intrinsic value. Buy low, sell high. We have heard it many times before. But how to know when it's low, and when it's high? The intrinsic value of a stock is its true value. It refers to what a stock is actually worth, even if some investors think it's worth a lot more than that amount. Intrinsic value is important, because it can help investors understand whether the cost of a stock is undervalued, or overvalued compared to the market value of the stock. Let's calculate the stock's intrinsic value. For more accurate results, we will use two different valuation models to calculate the intrinsic value of the stock. Discounted free cash flow model, using the formula below, then, valuation based on earnings per share, 5-year average P/E ratio and expected growth rate. First model, discounted free cash flow valuation. This spreadsheet contains some financial data that we will use for the stock valuation. We see that the average revenue growth rate of the stock has been around 4% per year, for last 5 years. We see that the average profit margin of the stock has been around 6% per year, for last 5 years. Also we see that the average free cash flow to net income rate of the stock has been around 71% per year, for last few years. And we expect 8% per year average stock market return. Now, let's consider 3 different scenarios for V.F. Corporation: bad, average, and good. First scenario. V.F. Corporation will have bad performance in next 5 years, and we will use the following parameters in our calculation. Future revenue growth rate would be low, 4%. Future profit margin would be low, 6%. Future free cash flow to net income rate would be low, 60%. In this case, the fair value of the stock today would be $19. Second scenario. V.F. Corporation will have average performance in next 5 years, and we will use the following parameters in our calculation. Future revenue growth rate would be average, 6%. Future profit margin would be average, 8%. Future free cash flow to net income rate would be average, 70%. In this case, the fair value of the stock today would be $30. Third scenario. V.F. Corporation will have high performance in next 5 years, and we will use the following parameters in our calculation. Future revenue growth rate would be high, 8%. Future profit margin would be high, 10%. Future free cash flow to net income rate would be high, 80%. In this case, the fair value of the stock today would be $44. Second model. Valuation based on earnings per share. This spreadsheet contains another financial data that we will use for the stock valuation. The current earning per share price for the company is 3.55. Minimum rate of return. I will use 12%. Because when we invest in individual stocks, we are looking for a higher return than the S&P 500. For V.F. Corporation, analysts forecast growth rate around 10% per year in next 5 years, and future P around 18. Again, I will use 3 different scenarios for V.F. Corporation: bad, average, and good. First scenario. V.F. Corporation will have bad performance in next 5 years, and we will use the following parameters in our calculation. Future growth rate would be low, 4%. Future P/E would be low, 14. In this case, the fair value of the stock today would be $26. Second scenario. V.F. Corporation will have average performance in next 5 years, and we will use the following parameters in our calculation. Future growth rate would be average, 6%. Future PE would be average, 16. In this case, the fair value of the stock today would be $35. Third scenario. V.F. Corporation will have high performance in next 5 years, and we will use the following parameters in our calculation. Future growth rate would be high, 8%. Future PE would be high, 18. In this case, the fair value of the stock today would be $46. As you can see, today the stock is overvalued, $56, even if we expect the company's high performance in future. While VFC is still in line with the averages on profitability rating, there are some concerns on its financial health. Also, consumer stocks continue to be in a very bad place due to sky-high inflation and low consumer sentiment. And the stock is currently a little bit overpriced. The stock has been falling since January 2021. It may drop lower before it goes up. Be careful. I may consider buying the stock for the dividend, 3.53% yearly, if the stock drops below $50, and when it shows signs of reversal. Company strengths. V.F.Corp., formerly Vanity Fair Mills, is an American global apparel and footwear company founded in 1899. The company's 13 brands are organized into 3 categories: outdoor, active, and work. The company controls 55% of the U.S. backpack market with the JanSport, Eastpak, Timberland, and North Face brands. The company is well positioned in active and outdoor as consumers shift to healthier lifestyles and outdoor activities. It's also well positioned in work as the unemployment rate continues to drop and people get back to work. VFC's recent acquisition of Supreme will help drive long-term top-line growth and margin expansion. The company brings a lot of value to the table, like a high dividend yield, and a strong portfolio of high-quality brands. The stock has a yearly dividend yield of 3.53%. VFC is a dividend aristocrat. It has increased its dividend for 49 years in a row. VFC's return on assets of 10% and return on equity of 38% are amongst the best of the industry. Its profit margin of 12% is amongst the best of the industry. Based on estimates for the next 5 years, VFC will show a medium growth in revenue. The revenue will grow by 10 to 12% on average per year. In the coming 5 years, the earnings per share will grow by 15 to 20% yearly. Risks. V.F.Corp is close to 50% below its all-time high as consumer stocks continue to be in a very bad place due to sky-high inflation and low consumer sentiment. The company faces risks related to the cyclicality of consumer spending on apparel and footwear. It also faces risks related to intense apparel industry competition and unfavorable currency translation, as overseas sales account for more than 40% of revenue. Further deterioration to the global supply chain. In addition, VFC could be hurt by the high level of intangible assets and goodwill on its balance sheet. The company has one of the worst debt-to-equity ratios in its industry. 80% of its industry peers require less debt for financing their operations. Thank you for watching. If you found this video helpful, please hit the like button and subscribe to my channel.